The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this first day of the week, and it is the 28th day of November, and my pleasure to be here. I hope you all had a great Thanksgiving weekend. A couple of things going on. First of all, thank you to our wonderful hosts. Hopefully we can keep that high standard up all the way through here for this hour. We've got the Dow down 63 at 19,087. You got the S&P down 8 at 2204. Comp index is down 18 at 5379. Now, this is going to be fascinating. Volatility index is back in the 13s at 1330. No big deal, but it is up 0.98, 7.5%, big percentages when you come from a low figure. And I think that this is going to be a fascinating week for a couple of reasons, and I'll get into it as we do the numbers. And let me just do this quickly. This is the 120-minute chart of the Dow futures, made a high of 2211.75 last week, and that was on Friday. Pop up, and what we're looking at now is a peak D, and it's in this consolidation rectangle formation. But look at this four panel. This is what I showed my subscribers. Did I show my subscribers a lot? I must have been, I don't know, 20 charts over the weekend going into this morning. But basically, we've got so many. We have, I think this is very unusual. We've got 10 positions. Whenever we get over 8 positions or so, you're close to some kind of a top. But we have one short and I think it's 8 or 9 longs, of which one, actually at this particular time, all of them are in the plus column, and various gains of between 30%, maybe 31%, and maybe 3% or something like that. So they're all over the show, but yes, very nice. Now, what we're looking at is within the Chapman wave methodology. Let me just go to this chart here. I'll have to do it backwards. I'm just going to quickly show you the Dow chart. The reason why I thought that today we should see a peak in the daily charts of the Dow and the S&P is because the 120-minute chart of the Dow went to a leg E, and I drew in this little, like a little ABC down. This has nothing to do with the Chapman wave. This has to do with the pattern, that lightning bolt pattern, where we talk about A to B equals C to D, that type of thing. And I suggested that we're getting closer and closer to having some kind of a test of the 9-period exponential moving average. It's at 19,087. So this is the projection, and that was made over the weekend with all those many charts that I sent out. But what's really important is, let me just quickly explain for those of you who are new to my methodology, or those of you who are considering my workshop, my 3-seminar webinar workshop, I should call it, coming up in December into January, over 5 weeks. You actually get my newsletter. Anyone who's getting my newsletter might actually have already paid for the courses, hopefully, with the trades that we put on. Now, let's go to this. The basic concept is that the price comes straight down, and then at a certain point, there's a low that's made that's an identifiable low, and from that point, you can merely count each successively high peak. Peak A, B, C, D, and at D, other things can happen. Just keeping it as simple as possible. So concept is, from an identifiable low bar, you want to count each successively higher peak. At a certain point, it could be as quick as A, but it's sometimes B, and sometimes it's the very bar that goes 1 penny above B, starting leg C. That is where we consider that we're going from a buy signal to a buy mode. The moment I put an up arrow and a buy mode, the indication is there should be at least 4 higher peaks. There are other techniques that say we could recycle higher. There are other techniques that say, whoa, wait a minute, at D, you could have a deeper pullback. But D is the objective. All right, now let me get that out the way. Now let's go back to what we were talking about. Remember the Dow 120-minute chart that I showed you a little earlier on? If I can just find it here, Dow 120-minute chart. There it is, where I drew the little zigzag down. Now let's see where it is. And then we can go from there. And we'll go right to the Dow. There, this is the daily chart. Leg C, I'm suspecting we're going to get a peak C today. And the 120-minute bar should be right. There it is. And there it is. So we've pulled back, and we pulled back in one bar. Instead of going zigzag down, we've gone right to, we're at 19,079 right now. The low has been 19,072, a tad lower than the 9-period moving average, and that's kind of what we've been anticipating, and we're expecting this is going to be a peak C. And I was suggesting to my subscribers that there's a good chance that this consolidation could go into late afternoon Tuesday, maybe Wednesday morning. Now, the quicker you come out of it, the greater the upside potential is, the greater the chance to continue the upside. That's not, I shouldn't say upside potential, because that's talking about a different technique. Most importantly, I'm expecting at least a D and probably maybe even an E in the Chapman wave. Now let's go back to this. So the E-mini is down 950. There's your peak being made today. 22.1175 is the high. That's confirmed with the 120-minute chart. I don't think we're going to rally back today. It might have to be tomorrow. So let's just continue now. I'm going to go to, so INDU. This is the Dow with the 3 time frames. Here we go. INDU. Daily, probably a peak C. And parameters to watch are 19,000 support, maybe 18,960s is the 200 is the 9-period moving average. I don't think we get to that now. I think we get to that after we make D and E. This is a leg F/A in the weekly chart. The technicals are really improving a lot. The favorability of calling it an A right now is very high, and a spectacular leg D in the monthly chart, but we've still got another couple of days to go before the month wraps up, and we're right in the inside track repellent zone right there. So the high for that will be 19,290s to 19,320s. That's going to be tremendous resistance. And the support, as I said before, is 18,960. I could even see over a period of a week or two, we could even come back to the 18,650 level over a period of 3-4 weeks. All right, let's go on. S&P. SPX.X. Probably making a peak C as well. And yeah, it's the same thing in the weekly chart. Weekly chart, the V-shaped pattern is not quite as strong as the Dow. Still very good, though. Where we close this week is going to be important, but it's a leg C in the monthly. So I'm in a buy signal to buy mode in the Dow daily, the Dow weekly, and the Dow monthly. Buy mode in the S&P daily, weekly, and monthly. This is all very good action. So now let's go to the QQQ series. The QQQ right now is down 16 cents. It's actually lagging, and that's a very big indicator to say, hey, don't get too carried away with the upside on the shorter term. There might be not that much further to go on the upside, and then we're going to need a consolidation to see what happens here. After the break, I'll talk about Amazon and some other stocks in the retail area. Yeah, in the retail area. Let's go to gold right now. Gold is up 10 at 1191. It was up huge at 17 this last night, and it came back down. But the real issue is that the dollar, which is still holding very well, is down only 8 cents at 101.43, has made a peak B. I think it's going to C and D, and that's going to be very positive. If you look at the TLT, trying to bounce here, it's up 85 cents at 181.67. I need to talk a little bit more about this when we get back, and we'll also discuss some of the sectors. Basil Chapman, Tiger Technicians Hour. Dow's down 71, S&P's down 9. I'll be right back after this important message.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and what I wanted to show you here is SPX.X. I forgot to do this. Within the Chapman Wave methodology, let me just double check here. So there's 2203.84 at 79, that's lower. And 75, that's lower. There it is, leg D down to the downside. D's also work to the downside. Most importantly is look how many D's you've got here. Peak D goes a little bit to an E. There's the S&P 5-minute cash. And then it goes to a peak D right there at 4 o'clock on the 22nd, plummets down to, this is the 5-minute chart. When I say plummets, it really means sharp decline from the 2204 level to the 2194 level. Then it goes peak ABC, D, pulls back, ABC, D, recycles, goes to E and F, but just a very quick E and F, pulls back, and then it goes ABC, 1, C2, D. And that was the close on Friday. And then kaboom, down to the downside. Now we've got a D to the downside. I had already circled in the left side, right side price time match. I circled in the 200-period exponential moving average support, the left side, right side price time match, the Chapman Wave inside wedge. I had that circled right about there. I said, okay, that's where I think we're going to go. 2202s, 2203, somewhere around there. And we have made a low of 2203.34. So now we're going to see some backing and filling in. What's really important is the S&P cash needs to get from the 2203 level to the 2206.50s to start showing, now I've done my consolidation. I can spend the next rest of the day just chopping around, maybe slightly lower low, but I'm starting to establish some kind of a base, at least for now. Okay. We'll go back to the TLT. In the TLT, we're at the 9-period moving average resistance at 121.65, and I think this is just the start of an attempt at a move to the upside. If you look at this line, let me just move that. There, I can make this bigger. The weekly chart, look at that huge move in the weekly chart. I've drawn in this dashed line. This is really, I called it a price, a price time match. What I mean by that is that, let me define it a little bit better, parallel price time match. And what I've done is I've drawn this in and said from the low in the TLT weekly back in the week of December the 27th of 2013, at 101.17, there was a move all the way to two buy modes. They went to a second peak E at 138.50, January, the last week of January of 2015. And it comes tumbling down to the low of 114.88, and that low was made 626.15. Let me just type this in so we're talking apples to apples. 6, did I say 26.15? Okay. And then what I'd done is I used that same measurement and angle to draw a line, and I just left it. I just put it in and I left it. And that line said that by the week of the 2nd of December, there should be a test of the line. And we've just got a test of the line. The stochastic is flat at 5.5. I'm going to be teaching all these techniques, well, as many as I can. Let's put it this way, because I also want to practice them. It's no use giving you all those techniques, but not without practicing. I want you to get a feel for it. I want you to understand you can do these things yourself. And what's most important about this is that you've come down to a leg D, a possible trough D. But the stochastic at 5.56% and flattening out says that there's not enough strength to really push you in a V-shaped pattern that says you're going back to the 126 as the 9-period moving average in the weekly. But it says there is enough strength to test the 123.40s in the 9-period move, the 200-period moving of the weekly, and maybe go a little higher. But then you're liable to make an arch formation and do some testing. Do you break to a lower low than last week of 119.25? That'll be the question. Most importantly is that the power of the move down, especially with the candle of the 11th of November, 131 to 121, that is a whopping move in a single move down. We've actually seen occasionally some big moves to the upside, not that often, but big moves to the upside. But like this down, no. So now let's do something else. So the TLT says, we're not ready for a big move up. I don't yet know if I'm confirming the Japanization of our bond yields is complete, but I think there's a really good chance that they're going to try to push for higher rates. But let's just watch this closely. In the meantime, I don't have a position in the TLT, don't have a position in the TBT, which is making a top here, which made a top actually at a peak E 2 days ago. I'm going to be watching this closely. Now I need to talk about some other things. In terms of the dollar, my estimation is that everything I did over the weekend suggested that the dollar is likely to go to a C and then a D to the upside in the daily chart. That there's a good chance that this will be a leg E in the weekly and a leg D in the daily, and that at some point we're going to get a pretty good consolidation, maybe 6 to 8 weeks, maybe even more. And at that point, I believe that the three other, instead of, when we look at my 4 technical indicators of Dolly, VIXY, Bondi, and Goldie, we will see Dolly start to move down, that's the dollar, and Bondi, that's bonds, VIXY, that's the VIX index, and Goldie start to move up. Now, whether that's going to be termed a counter-trend rally or an intermediate-term rally or a huge multi-month rally, I just cannot say at this point, because I need to see, number one, how on the last day of November, how the dollar closes for the weekly candle and the monthly candle. If there is a new high this week above 101.48, which I think there will be, that'll suggest strongly to me that leg E is continuing, and I could have called this a recycle. It hasn't quite. I circled it as a Chapman wave instant restart possibility, but I'm just leaving it out for now because I think at best it's going to go to an F in the weekly and then take a timeout. That's really what I'm thinking. I don't think it's ready yet, but it could be ready by next week, maybe next week. All right? So now the next thing we need to look at is the IWM. The IWM is in fact a quick email I got just saying Tom DeMark says 14 up closes is exhaustion trend. Yeah, but that's also Tom DeMark saying the other day, if I might be wrong, but I think he had a 9 and then a 13. I think he was looking for a really sharp decline. So I don't know. Maybe he's right. Maybe he's wrong. All I can say is that I've got this as a peak B potential if there's no new recovery high today. Number one, this explosive gap. Nobody talks about this, but a gap from a major low. No. You don't know it's a major low until much, much later. A gap from a significant event low. There are. And that was the election. And here's the gap that you got from the takeoff. The low was made at 114.88 on the 3rd of November. On the 4th of November, there was a slightly higher high of 115.05. On the 7th of November, you got a whopping gap to the upside, a gap that goes from 116.19 to a low of 117.71. That explosive takeoff gap is something that is so significant in my work that I think we will get a leg D in the IWM, and it's one behind the S&P and the Dow. So they could extend them to ease. I'll be back, Basil Chapman, Tiger Commission Hour, and it will be time to talk about my webinar coming up. Dow's down 51, S&P's down 7, and here's the chart.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, I'm doing a series here. This is simple technical tools to analyze charts. Basil Chapman's 3-session course on the Chapman Wave by Basil Chapman. Starts December the 6th. These are Tuesday nights, December the 6th, 6 o'clock to 7:30. And in the very first one, we'll be notating the peaks and troughs using the Chapman wave count. Now, I consider it to be very important, but the technical tools are even more important. In other words, the lettering, just like I use the lettering to say that I think we're about to have a dip in the market right now, based on that the analysis I did on the 120-minute chart, and the analysis I just did a few moments ago, saying that we've got your trough D and the 200-period moving average, etc. Those are the techniques. But in the very first one, I'm really taking you through the process of how to set it up, start to count, how to count correctly. Those of you who count, sometimes you make a little mistake, and I'll explain to you what you might be missing. My question always is, are you absolutely sure that you've counted each successively higher peak? Even one penny makes a difference. Okay, and then I'm setting it up, and I'm going to show you, maybe I'll show you how to put the first session. I'll see how it goes, but probably I'm going to say this is how I use the MACD and the slow stochastic. This is where I add the 9-period exponential moving average, etc. It's just the whole setup, what we're looking for, and there'll be a lot of practice exercises. We'll spend a lot of time with you actually practicing them. I'll even give you some to do as homework. You can send them to me. I'll check them out, and I'll explain where I think you went wrong. Okay, that's very important. And all the time you're getting my newsletter. I have never done this before. You're actually getting my newsletter so you can see how it works, just as I did for, I'll show you in a moment. Now, I did with all the different charts and what we're looking at and why we're looking at them, why I always show the charts every day that I can with stocks that we have or we're interested in. Okay, December the 20th, 6 to 7:30, it's Tuesday, a workshop on studying the bear chart. We start, once again, we start with the naked chart. I start adding the wave count. I add the technicals. I say, what are we looking at? I'll start to teach you how to draw the cup or the arch formation. Now, some of you might not have the beautiful tools that I have here at TradeStation, but it doesn't matter. You can even print it out on a white piece of paper with the black charts, and you can just draw it in by hand. After all, I mean, it doesn't take more than a second to do. So the cup formation, the arch formation, remember, there are only three directions. It's either up or down in a straight line. It's either a cup where the price comes in a circle down, a half circle down to the bottom, and then comes back up again to retest the left side lip, or it could be a V-shaped pattern. That's really one pattern down and then up again, or it's up and then down again, the arch formation or the inverted V formation. So you only go three. You got 1A is up, 1B is down, it could be vice versa. 2 is 2A cup, 2B is V-shaped pattern, and 3 is arch or inverted V. That's all you got to learn. It's from there that other things can happen. And that's what we're going to do. Once again, I give you practice exercises. I'm going to teach you how to draw channel lines. You saw that just a moment ago where I drew these lines, a trend line, a channel line. There's a difference. A channel line means you've got two parallel lines. A trend line means you've just got one line, and that one line will give you an incredible amount of information. I'm going to teach you the Chapman Wave Inside Track, how to draw it, what does it mean, how you can use it. And this is like a masterclass series, but I just love doing this, so I love teaching it. The third one, January the 10th, also 6 to 7:30, and all of these are archived. You can play them over and over and over. Workshop on the larger time frames. How do I use the shorter time frame, the 120 minutes, to get me to a buy signal that starts the Dow buy signal? Then how does it go to buy mode? What happens when it's a full buy mode? How do I relate it to the weekly chart? Then the weekly chart, you remember we did that with AT&T. We got it almost at a low in the 34s, and we ran it for the daily. Then the daily recycled to be successful in the weekly, and then the weekly was still successful. We used it for the monthly, and that's how we'll do it. So this is very important, and it's a simple technical tools to analyze charts. It's $295. There's a $100 discount, which will be given to current opening call paid subscribers. And just think about it. So in other words, if you do subscribe and you're paying the 195, you just need one trade like we had right here that I put on after this started, after the advertising of the new webinar started. Here we are. We're long at 3.46. No, I'm sorry, 3.45. Let me just double check here, just to give you the exact on the date and everything. Yeah, we have a long position at $3.45 on the 21st of November. This is FTR, and it's Frontier Communications. Why? Because it had this really exciting pattern that I thought was showing us a tremendous amount of information. And I drew in the left side, right side price time match, which said if everything works out well, this Chapman Wave inside wedge should take you to this gap. And the gap has a high of 380, and the low the previous day of the first was at 390. So that's your target area, and you're at 374. So what is that, 8-9% you've made in a week? I think that's nice. No, what I'm talking about a week is way less than a week. So this is the sort of thing that we're doing. I'll show you how to short, because a lot of people say, yeah, I always ask the question, are you better at shorting or buying? And it's an interesting question. A lot of people don't think about that. But I found that there are phases I go through where I'm just identifying the buys, and there are phases where I'm identifying the sells. And when I work it the other way around, I find it's getting a little more complicated. So I'll teach you how to use something like this. This is EW, which I've mentioned before. It was Life Sciences, trading now 84.77, and we were short from 121.41. Not a big position, but short. And how did that was a peak F top in the daily, peak E in the weekly, and then an unusual G. I'll talk about how you might be able to identify why something isn't an instant restart, that it's probably only going to go to G and then come back down. So it's a wealth of information. And believe me, you will find that it just gives you that comfort factor that you need. A lot of people trade and they put the trades on and they're quite successful. They also don't know when to exit. So your D, E, and F is where it starts to help you. I'll teach you that, look, if you are used to going long, that's one. If you're used to going short, if you use the inverse, this is the dog, the DOG. This is the diamonds. We've been long the diamonds for a while. This is the Dow, trades 100% with the Dow. And this is the 100% short with the Dow. And that's just saying, look, if you learn how to identify this mirror image, you might find you're seeing things here that are just way more important to you in the way you've practiced, or the art of your entries, that really helps you, that you really want to go long something, but you're very good at identifying the short, and that would have said right there, you could have started a position. So this is all very important, and I'm really looking forward to it. And as I say, we're going to stay long. We're going to try to stay long as possible in this position in the Dow for a couple of reasons, but it might be a reason for taking some off if we get to a D or an E. But I'm also looking at something that is spectacular. Look at this. I showed this chart over the weekend. If I can find my charts, where did I go? All right, I'll be right back in a moment. Let me just pick up this right here. This is the S&P. This is the cash S&P. And you see how it held the 200-period moving average? So this is leg A. Does it hold or does it fail? Is this what? How important is the 205, the 2200 area over the next day? We'll talk about that when I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Dow's down 60, S&P's down 8. Now, this is going to be very important. You see, I had a couple of questions about bonds. Let me deal with it this way. This is the weekly chart that I showed my subscribers. See, there's a leg E. Right at that resistance, well, it's a level that I define saying we've been here many times before, up and down. So there's no big deal. I mean, we've been here before. What is a big deal is that the measurements by which the Fed likes to talk about how they're going to gauge whether or not to implement another interest rate hike seem to all meet the criteria that they've been wanting. That's number one. Number two is that within the context of a new administration, are they going to implement it in December? Or are they going to say, yes, it's a definite probability. It is 100% chance of maybe making a rate hike. But we don't want to interfere with whatever the next president is going to do. Now, they really, in a sense, can't do that because they're supposed to be independent. We know that the emphasis is on supposed to be independent. And I think they do try in a way to be independent. I don't see why they shouldn't be. But at the same time, they don't want to abruptly throw in something that is in conflict with what a new president might be wanting. I'm not sure it is because he's spoken before about how ridiculous it is to keep rates so low. But in fact, I cannot believe to this day you haven't had President Obama talking about that the stock market is at all-time highs, and he came in when it was at multi-year lows. It's something he should be proud of, and he never talks about it. I just don't understand why. Anyway, so interest rates have been a factor. Why? Because it isn't just interest rates, it's that the Fed was pumping money into the system. Now, they've been stopping that for a while. So we're going to see the market is really on its own, and what you really want is to hand over the baton. You remember that time when the U.S. men's relay dropped the baton in the Olympic Games? And I remember just yelling and screaming because when I was an athlete, that's what you practiced over and over and over. There's no automatic that it's just going to happen. You got to be in the right lane. Your foot has to be in line, just everything. Your hand has to be out. The baton you practice and you baton. Well, they missed an opportunity there to win. And in fact, they lost on a technicality that was such fantastic athletes. It was just a shame. It's a real pity. Well, we want to see here, is the handing over of the baton going to be smooth, or is it going to be deleterious to our wealth and health? I suspect that the Fed is really worried about that. They're trying to figure out, can they do this? What they really would like is maybe a 500-point decline in the market and then onto new highs, just a kind of a hiccup. They do not want 2,000 or 3,000 points down in the Dow, 300 points down in the S&P, as there's this transition. If they're going to stay, if the Fed chairman's going to stay, and she said she's staying. So this is going to be very interesting. How does it happen? Now, coming back to the yields, right? Why am I talking about this? Because the yields are suggesting that we've seen this kind of speed before. Back in 2015, January, was it? Yep, January of 2000. The low was at 22.26, and it went to 32. That's a 10-point gain. Here, the low was 21.01, and we've gone to, what was the high last week? 30.91. So there's your 9, or yeah, so you call it a 10-point gain. It's the same proportion, but we're above the trend line that was resistance, and we're at a level that says, you know, the last high of 31.40 back in the week of November the 13th was a bounce in that Chapman wave H formation, the one that I'm going to be teaching when I do my webinar, the H formation and all these different techniques. If this is an E, we've seen before we ease with turnaround areas, but at the same time, one of the things that I've been discussing is that the movement in the 10-year, that's the brown one, is the 10-year, also in leg F. I'm going to call them E/A, F/B, and F/B in the 5-year cyan-colored 5-year T-note yield. These are all yields. So when I'm thinking about this, I have to put it into the technical context, and it said that the speed with which we've broken out says that if there's a break this week or next week above 31.40, a close, I should say, not a break, it needs to be a close, about 31.40, the 32.55 high of June, the week of June the 25th, is gain. That's a magnet all of a sudden. So that says if there is a rally in the TLT, now I want to put the whole thing together. Let me go back now. I'm going to I give you the numbers. The 10 years at 23.16, a break above 24.20, let's say, would be very positive for yields, not bonds, but yields. And in the 5-year, it's already broken out, so that's already there. So this is going to be a very interesting thing, because if the yields pull back, and from 29.80 in the 30-year, if it pulls back anywhere to the 28, to the trend line support of 28.10, that's going to be a big suggestion that we've made some kind of a top in yields. Okay, now let me explain why I'm talking about this. Because within the context of the markets, let me go through this very, very slowly, because this is a little more complex. In the Chapman wave methodology, when the stochastic is so strong and the MACD is still, it's just stopped expanding right now, but it had been expanding, but it's huge. Look at this. Look at the difference between the fast green line, the 9-period differential, and the slow red line. That's suggesting that we've gone very quickly in the Chapman wave squash to a peak ABC. Then all of a sudden, what we're looking at here is that there's a chance that we take a little bit more time before we go to D. And that's why I'm saying towards Wednesday, maybe even Thursday, we make that D. How we make the D is going to be really important. Because why? When you've got the MDY, and this is what I showed my subscribers over the weekend, in a single leg A, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 consecutive highs. It hasn't been done for decades. It's a really long time. With the Chapman wave squash, that's still suggesting that even though the weekly shows we're in the Chapman wave inside track resistance area, that's the repellent zone that I developed a technique in, that's suggesting that this is either going to turn into a single leg A up because it fails to make a new high. It could even go to B, but it has the characteristic. And that will only occur if at some point in the next month, there's a takeout of 286, the gap low of the 14th, 286.06. A gap down into that area says, that's if it's within the next, if it starts to occur with no new high significantly above, say, what was the high today? 298.65. So any new high that doesn't close above 301, but instead we tumble to the downside, says that's a failure pattern. I don't see it failing yet. This is really good. Look at the IWM. Stochastic is 97%. The MACD is good. This is great action. The dollar still wants to go higher. I'm sorry. We've been bulls. We have 9 long positions and 1 short position. Very unusual for us to be this bullish. I think we're going to be going higher. And I think we're going to be going higher. And then the TLT and gold and the VIX start to really rally strongly, but not just yet. Basil Chapman, Tiger Technicians Hour. We'll come back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, I had a question in the den about the trend line that goes all the way back. I'm putting it in right now. This is a trend line that goes all the way back to the high of 2011, when the yields, the 30-year T-bond yield was at 47.89 back in February of 2011. If I go to the top, the double top, and perfect double top, lower lows, perfect double top at the F to G, 39.74 high of January of 2014, 3 years later. And now you've got almost 3 years later, was it 2 years later? It's a third year. We've got, this is the pattern. a crack and a break above 3150, you're at 2.984. A break above that would suggest to me that thank you for bringing that up, because my whole discussion here is about the Chapman Wave instant restart. 2 weeks ago, I was asked by someone who said, have you ever seen an instant restart in your yield chart, in your weekly yield chart? Let me get rid of this because it's the wrong color. And the answer is, I don't recall that ever happening. So that would suggest to me that yields are absolutely going to rally very strongly for at least a couple of months into January. And I'll tell you why. If it's this week, that's fine. But if it's next week and there's a break into the 31, call it 60s, that's to give it a little room, 3160s, it breaks this whopping trend line right here. And what I love about this trend line is, let me show you something. I don't want to run out of time, but this is so important because it has to do with yields. If I do this, and then I do that, click. Remember the pattern I was looking at, the parallels? Well, look at this. Right there. Oh, look at that. Yeah, this is, I'm going to make this green just to show you. That is suggesting, if I can, I hit the wrong one. Oh, yeah, I've messed everything up. All right, there it is, right there. Okay, so that takes us to G. Yeah, well, so it's 2 weeks late. So now it's 2 weeks late, 3 weeks late in matching it. But that's the match that I was talking about. It's your left side, right side price time match. No, it's the left side, right side time match, not a price match yet, because it's got to break out, but it's real close in a downtrend line. Okay, good. So yeah, if that's good question. My answer is, if it breaks out, I have to think of it as something very serious. Now, a couple of things I want to look at. Crude oil, just in that trading band, I said the crude oil itself between, what did I say, 48 and 44s, crude oil, CL. Crude oil, yeah, 44s and 48s. Yeah, that's what I think. Crude oil is just stuck. 49.10 is now the 200-period exponential moving average daily resistance. All right, so before we wrap up, let me once again say, go to the front page of TFNN. You'll get my newsletter. I think you'll find it extremely informative and educational. Every single day I give like little lessons on that. So simple technical tools to analyze the market, to analyze charts, 3-part course on the Chapman Wave. They're archived. You get my newsletter all the time so that you can see exactly what I'm talking about. Please check it out. I think you will find it both an educational tool, a comfortability tool, but even more important, something that I will be following with you so you can ask me questions, etc. Looking forward to it. And so let's get out of that. And let me just say, the Dow right now, I think that we're getting real close to a bulk of this down move being done. There could be a little bit more time and a little bit more price to the downside. I think that the 18,900s will hold the support. Let's see what happens. And I do think later this week, we start to make leg D in the Dow, but the QQQ is going to be the laggard. And that's what we're going to follow. Okay, I think we're done. Have a wonderful rest of the day. I'll see you tomorrow, and I hope you have a chance to check out the front page and see what's in that special 3-part course that I'm giving as a webinar series. Basil Chapman signing off. Stay tuned for a great program. Your swim lessons coming up. Ooh, it's cold weather for swimming, but it'll be indoor swimming. Have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.